Welcome to the $1,000,000 question, or should I say, the $1,000,000,000,000 question. Is crypto in 2026 still worth investing in, or is it just too risky now? Remember those friends who bought Bitcoin when it was basically free? Now they're either retired on a beach, or they bought high and sold low. If you're feeling that FOMO, stick around. We all know the crypto game feels like a tug of war between fear of missing out and, oh my god, I lost my entire rent money. It's a true roller coaster ride. So looking forward to 2026, where does this wild world of digital money stand? Are the opportunities still juicy, or is the juice not worth the squeeze? Let's quickly flash back. Early crypto was the digital Wild West. Unregulated, explosive, and a little bit lawless. Huge booms, massive busts. It was truly chaotic. The volatility was epic. One day you're buying a Lambo. The next day you're calculating if you can still afford ramen. It's like trying to predict a sneeze. You know it's coming, but you never know exactly when or how big it will be. But 2026 feels different. The crypto market is growing up. We're seeing more maturity, more talk of regulation, and definitely more mainstream adoption. It's moving from nerd hobby to global asset class. So is it still worth it? Absolutely, for a few key reasons. The foundations of this technology are only getting stronger. The big financial players, the institutions, are finally showing up. When banks and major corporations start building infrastructure, it signals long-term belief in the system, not just fleeting hype. It's not just digital coins anymore. We're talking about real utility. Decentralized finance for lending, supply chain management, and digital ownership through NFTs. It's functionality, not just speculation. The tech itself is constantly evolving. Blockchains are becoming faster, cheaper, and greener. Think of it like going from dial-up internet to lightning-fast fiber optic. Now let's talk about the buzzkill, risk. Yes, the market is still risky. If anyone tells you differently, they're probably selling you something. Regulatory uncertainty is a big factor. Governments are still figuring out how to handle crypto, and a sudden rule change can shake the market quickly. It's the constant sword of Damocles hanging over the industry. And watch out for the shady stuff. The rug pulls and scam projects are still out there, ready to take your money faster than you can say decentralized autonomous organization. The market is still wildly volatile. A 20% drop in a day is just Tuesday in crypto land. Reminder, this is not a savings account. Only invest what you are genuinely ready to lose. So how do the smart investors approach 2026? It's about strategy, not guesswork. Think of it as intellectual dieting, not a binge and purge. Diversification is your friend. Don't put all your digital eggs in one basket. Spread your investments across different coins, chains, and use cases to minimize damage if one fails. DYOR. Do your own research. Don't trust me. Don't trust your cousin's brother's friend who works at a tech company. And definitely don't trust random tweets. Read the white papers. Focus on the long game. Crypto is a marathon, not a sprint. Trying to quick flip rarely works out, unless you're incredibly lucky. Patience is still the greatest currency. So to wrap up, crypto in 2026 is definitely still worth investing in, but it's still risky. The industry has matured, but the wild spirit is definitely still lurking. The future is undeniably decentralized. Crypto offers incredible opportunities for growth and innovation. But remember, caution is cool, and protecting your investment should always come first. Start small, stay informed, and good luck navigating the exciting waters of crypto in 2026. Happy investing!